More than 1,000 people who lost money when the First Guardian Master Fund collapsed will see their retirement savings restored after a deal between superannuation platform Netwealth and financial regulator ASIC. ABC's business editor Michael Yanda takes us through it.
Basically, First Guardian and Shield were two superannuation funds that had roughly $500 million in each of them that collapsed and were shut down over this year. ASIC, the corporate regulator, has been trying to recover as much money as possible for people who invested in these funds. Netwealth runs a superannuation platform through which people invested in the First Guardian Master Fund. And for these more than 1,000 investors who made their investment in First Guardian via Netwealth, they will be compensated in full. They will get 100% of the capital that they put in back, which is very good news, particularly ahead of Christmas and the New Year for these investors. It does mean that they lose any investment earnings that they would have expected to make, but at least they get the money they put in back. But it does only affect the people who invested through Netwealth. That is about $100 million of money that Netwealth is paying back to customers. The quid pro quo for Netwealth is that ASIC, the corporate regulator, is not pursuing penalties against the company, despite finding that it failed in much of its due diligence around these funds.
Netwealth has also reached a separate but related agreement with another key financial regulator.
Yes, so the superannuation regulator, APRA, which regulates banks, super and insurance, has reached an enforceable undertaking with Netwealth related to these failures. And essentially the key failure is that Netwealth did not undertake sufficient due diligence about the funds that it was putting on its superannuation platform. So investors go to these platforms and they have what's called a menu of funds to choose from. First Guardian was one of the funds on Netwealth's menu, but Netwealth hadn't really checked about the bona fides of First Guardian, the risk levels of what First Guardian was investing in, and so it's made enforceable undertakings with APRA to bring in an independent expert to look at its risk management, its governance of which funds are allowed on its platform. It's going to review all the funds on its platform and see if they are indeed suitable for Australian superannuation savings to go into.
And so, Michael, as we wind up the year, where are we at in terms of investors caught up with the First Guardian and Shield collapses being compensated?
Yes, so we've seen today $100 million going back to more than 1,000 First Guardian investors from Netwealth. A few months ago, Macquarie, which also runs one of these superannuation platforms, stumped up $321 million to refund roughly 3,000 investors who'd invested in the Shield fund via its platform. But there are still two big superannuation platforms that are being taken to court by ASIC where no settlement has yet been reached. That is Equity Trustees, where $160 million was invested via that platform into Shield, and Diversa, where around $300 million was invested by in retirement savings, was invested in First Guardian. So investors that have gone via those platforms are still waiting to find out whether they'll be compensated, and they may have to wait some time yet, with both of those companies indicating that they challenge the court action by ASIC.